Can I ask a dumb one? Now,
Are you asking a dumb person? Are you asking a dumb question? I think maybe every episode the answer could
it could
alternate.
change. Our
Yeah.
inbox is really heating up. I'm getting lots at podcast@personalfinanceclub.com. Some people, y'all are wilding out. There's too many
Wait, are you
questions.
serious? We're getting emails there?
Yes.
That's amazing. Who are people listening to this? I
People
didn't
are
know we were
listening.
recording.
I can.
I've been talking to a Pringles box this entire time, or a Pringles tube.
I'm vetting the inbox. Some people are asking like 12 questions per email. I'm like, maybe we need to set up an office hour. But yeah, it's great. I am very happy that people are not only listening, but asking questions, and they're good questions. And this one I plucked because not only was it one of our first questions, but it's something that you talk about a lot. It's from either Bridget or Brigitte. And she asks, I purchased life insurance about 5 years ago and don't want to lose the money I have already invested. Why is this investment strategy bad? I'm maxing out my 401k, Roth IRA, and I'm investing money into my Vanguard account monthly. I have no children, but this was sold as an additional investment avenue. If it is as bad, I think she wants to say, is it as bad like you've mentioned on your Instagram? What do I do?
Yeah. So just for the record, I don't love talking about life insurance. I don't really like talking about it at all. And the reason I do is because it's one of the most predatorily sold products I've ever seen of anything. It really feels like there are just these very dishonest, disingenuous people pushing these very, very fake narratives about why people should be investing in life insurance. And, Bridget's in incredible shape, by the way. She's maxing out her 401k. She's maxed out her Roth IRA. She's investing money into what I believe she means is like a taxable Vanguard brokerage account. Like, Bridget's crushing it. She's going to be a multimillionaire. She's going to have an incredibly successful financial life, whatever she does with this life insurance policy. But what I often see is 25-year-old school teachers who don't have an investment to their name, who are being sold annuities or life insurance or IULs or variable life insurance or whole life insurance, basically because the first person they ever came across in the financial services industry only makes money by selling these very expensive life insurance policies. And then, exactly as Bridget said, it was sold to me as an investment. Like, what she said there is illegal. Life insurance agents aren't allowed to sell these things as investments, but they almost exclusively do. And that's why I talk about it, because it's basically, in my opinion, a scam being operated in broad daylight, being pushed on these young people who don't understand what they're buying to their devastating financial outcome. Just for some scale, I bought one of these life insurance policies a while back, and I did the math. There's a 90-page policy. I read all 90 pages. I very dutifully put every single detail of the policy into a spreadsheet, put like an actual investment in the spreadsheet, compare it side by side. The insurance policy I bought over the course of 40 years would have grown to $320,000. To be fair, that's kind of like an optimistic scenario because these policies can lapse if you miss payments. There's like all sorts of, they can change the rules on you. There's all sorts of ways these can go worse. But like optimistically, by the pitch that was given to me, it would grow to $320,000. An investment in an index fund, the same exact index that this life insurance policy purportedly tracks, would grow to $1.8 million. So while Bridget's asking, is it as bad as you say? I was like, well, you might end up with $300,000. In the case of the one I bought, yours is different because they're all different. They're very hard to like pin down because they all have like differing rules. But, in the case of the one that I bought, I'm $1.5 million worse off, right? And if I'm a 25-year-old teacher and this is where I'm putting my only investment, to end up as a 65-year-old teacher with $300,000 in the bank, you're a poor person. That's not going to produce much income. You're not going to be able to live for long. You're like, hopefully you have a teacher pension, some Social Security, a little bit of cash from this policy. Maybe if it's survived that long, most of them don't. But if you had an index fund, you'd have $1.8 million. You could maybe have retired early. It's like life-changing, right? And so is it as bad as I say? I'm like, yeah, that's what I think of it, right? And so to go back to Bridget's question, is it as bad as you say? I think it is, because long-term you're going to end up with dramatically less money. In your case, though, you're setting yourself up so well with your 401k, your IRA, your investing money. does it hurt to have a life insurance policy? Like, maybe not. It's not going to be that dramatic difference. Like, it's not going to be the difference between retiring and not retiring. I still think you'll be worse off. So what do you do? And by the way, she says it was sold as an additional investment, and she has no children, right? So that just speaks to the insurance salesman mindset, which is they're not looking to actually insure you. The purpose of insurance, they're looking to misrepresent this product as an investment and sell it to people who don't need life insurance, which is what happens all the time. And so she doesn't want to lose money. And so what I say to that is, first of all, Bridget, there's a sunk cost fallacy. The money you've put into it is already gone. It is what it is, or it's not gone. It's in the policy. That's behind you. What you care about is what the best decision is moving forward. And there's a saying, you don't want to throw good money against bad. So I don't know the numbers, you didn't include them, but like, let's say you put $5,000 in this policy. Just because you don't want to lose that $5,000 doesn't mean you should put another $20,000 into the policy, right? The $20,000 might be better off invested in a real investment going forward, like just added to your Vanguard account. That said, I don't know your numbers. And so it's important to look. You can go look and see, hey, what's the surrender charge? How much can I get out? What's the real prospect of this thing? Understand what are the fees going forward? What is the likelihood of lapsing? What's going to happen to the cost of insurance as it goes up? I know nothing about your policy, so I don't know. But it's worth taking a hard look at it and saying, okay, from this point going forward, can I get any money out? Should I keep putting money in until the surrender charge lapses? Is there money better spent elsewhere? What's the real life insurance benefit to me, if any? Do I need life insurance? If I do I need term life insurance in place? And, all these questions are a little bit hard, which is why I think it's really important to talk to a flat fee financial advisor, because flat fee financial advisors don't sell products. If you go talk to an insurance salesman, the only way they can make a living and the only way their brain operates is by thinking about how they're going to sell you something so that they can continue to raise their family. I know no disrespect to the hustle, but from your perspective, you can't get an honest answer when that incentives, but when that incentive is in place. But when you talk to a flat fee financial advisor, like those on Nectarine at hellonectarine.com, full disclosure, this is a company I started because I feel passionate about the business model of financial advisors and how messed up it is for most people. But yeah, you could go grab an hour with a Nectarine advisor, show them your actual policy, show them the incentives, show them your other, the rest of your financial world. And then, they're not insurance haters. They don't care. They're not Vanguard haters. They're not anything haters. They just want to do the best for you, and they'll give you their honest opinion without having to worry that they're trying to make a commission. So that's what I would do.
Boom. Just like that. Bridget, I hope that answers your question. Thank you for writing in. Now the questions are going to start to flow, and it's like we're going to have to pick and choose. It's going to get
This
tricky.
is exciting. Episode 3, we got a lot of questions, but keep writing your questions in. What's the email address?
Podcast@personalfinanceclub.com.
Nice.